Good afternoon, and great to see everybody. Welcome to the second installment of the FinTech Talk series, hosted by the FinTech Sandbox, where I gotta say the next few days of speakers and discussions look amazing. The theme of this week's events, Wall Street to Main Street, the role of ensuring global inclusive growth, really hits home right here in Massachusetts. When we last met at the September 2020 FinTech Talks, Mike Fannin and I shared insights on the developments of the FinTech Working Group, which is comprised of 27 leaders across the FinTech ecosystem. FinTech is one of 7 key innovation sectors for the Commonwealth, and we're excited about the potential that exists here in our region. We are also enthusiastic about being on the cusp of launching a new initiative in Massachusetts that will help boost the broader community of FinTech innovators and entrepreneurs. The community of thought leaders and innovators here in Massachusetts is second to none. That includes Ken Montgomery of the Federal Reserve of Boston and the many other speakers participating in these talks. On behalf of the Commonwealth, I'm honored to be engaged in this initiative, and it's been a privilege to co-chair the FinTech Working Group with another of the industry's leading visionaries, Mike Fannin, head of MassMutual US.
Thank you, Secretary Keneally, for those kind words. It's been my pleasure to work with you on this important ecosystem initiative. Your partnership and support have been invaluable in getting us to this point. And good afternoon, everyone. I'm incredibly excited to see the second series of the FinTech Talks being launched. When thinking about the theme for today's kickoff event, a fireside chat with Ken Montgomery and Rebecca Fannin, the topics of real-time payments, digital currency, and strengthening local economies rose to the top of the list. I'm very excited about the revolution taking place in the ecosystem with increased startup and corporate collaboration, thought leadership by our academic partners, active support from our investment community, and deep engagement with enabling organizations such as FinTech Sandbox and Mass Challenge. The FinTech Working Group spent the last 12 months assessing options on how to make Massachusetts the first choice in the world for entrepreneurs to launch their ideas and establish Massachusetts as a leading FinTech hub in the world. To achieve this goal, we leveraged the findings from the E&Y ecosystem study conducted last year to drive the agenda for the upcoming programming and initiatives. I can't say more at this time, but as Secretary Keneally mentioned, we're honored to be very close to launching a framework for all ecosystem members to engage and participate in our world-class FinTech hub. This fireside chat is just the first of a series of virtual events going on all week long. Please join the FinTech Sandbox for this afternoon's session at 3 p.m. on what FinTech can do to help small businesses recover and move forward. And tomorrow at 12 p.m., please join the discussion on Financial Services Shifting Center on ESG. And with that, I'm thrilled to welcome Rebecca Fannin and CNBC and Silicon Dragon Venture to get us started with her fireside chat with Ken Montgomery.
Fannin. I'm the founder of Silicon Dragon Ventures and also a special correspondent at CNBC. I am so happy to be chatting today with Ken Montgomery of the Federal Reserve Bank of Boston about all the innovation that's happening within the Federal Reserve System and all the changes that we've seen over the past year. Hello, Ken. How are you?
Good. Thank you, Rebecca. Good seeing you.
Good seeing you, too, and hearing you. Over the past year, the pandemic has certainly given us many surprises, and I think one of the impacts it's had is on our payment system. I haven't seen anyone using coins or dollar bills in so much time. I mean, is this the end of our cash society? Are we just totally moving now to digital payments? And how do you think the pandemic has accelerated the payment system?
So I'll share some data with you to offer some insights. The Federal Reserve Bank of San Francisco conducts periodic surveys on this particular topic, including cash usage. And they in May actually included a supplemental survey And so the questions focused on three general themes: changes in payment behavior, cash holdings, and cash avoidance. And it was interesting to see that approximately 20% of participants reported they switched to paying online or over the phone as a result of the pandemic, with most of that switching taking place, as you would imagine, at restaurants, fast food locations, and big box stores. Nearly 2/3, however, reported that they made no in-person payments since March of 2020. So between March and May, people were basically not using cash for a lot of their payments. And so although certain online payments increased, participants reported that they were holding more cash on their persons and their homes than in the onset of the pandemic compared to 2019. And so 70% also indicated they were not avoiding the use of cash. But I think what you're seeing based on your comments is people are getting more comfortable with the convenience of other payment mechanisms other than cash, even for small dollar amounts. And so we'd expect that this is going to continue as we move forward in the future. So even when times return to, I'll call it more normalcy, because people are more comfortable doing things electronically for just about every other aspect of their life, we're going to start seeing this is going to continue.
I certainly agree. I think the only time I've used coins or cash in the past year is for the laundry machine, putting in quarters. And then I just realized that if I'm behind anyone in the checkout line, a few times I've been behind people in the checkout line where they're using cash, and it's so much slower. I'm thinking, okay, how long does it take to count? $18.20. So I'm really looking forward to everyone being cashless. Now, do you really think that this is also affecting the business side as well? We talked about it from a consumer standpoint, but what about from the business side?
Well, certainly it's impacting.
What changes do you think are?
So it's certainly impacting the business side. And so if you think across the country, across the world in that regard, those that can are working from home. So as business needs to continue, there aren't people in the office writing checks and processing checks in support of business activities. So that too had to move to more electronic mechanisms in terms of conducting commerce, paying bills, those sorts of activities. And then likewise, you're seeing that every financial institution, and I would argue most companies, are starting to embark on their digital transformation because they recognize the efficiencies associated with deploying new technologies, new processes that are going to take a lot of these manual processes out of the way. So you're seeing movement from corporate check into other payment mechanisms, which is a positive thing in terms of overall efficiency of the U.S. payment system.
Right. Now, you are really in an innovation role there at the Federal Reserve, and you're at the epicenter of so many innovative changes coming up that we're going to be hearing about a lot more in the future. And one of these programs is the FedNow service program. Can you tell us more about how that program is progressing?
Sure. FedNow is something we're very excited about. And FedNow is the first new payments business the Federal Reserve has launched in over 40 years. And so it's really being developed by the Federal Reserve to enable financial institutions of all sizes and in every community across America to provide safe and efficient instant payments in near real time, around the clock, 7/24, 365 days a year. And so those financial institutions that would participate in the FedNow services, businesses, individuals, they'll be able to send and receive payments conveniently, say, using mobile payments or through their laptop or their desktops. And they'll have full access to their funds within seconds. And so that gives them greater flexibility to manage their money and making time-sensitive payments. And so this is really going to be important in terms of the payments are irrevocable. They come into your account, they're guaranteed, and then when you make that payment to somebody else, they likewise have that same guarantee, all in doing it in somewhere between 5 and 20 seconds is our design objective. And so this is something that we've recently announced will be available in 2023, which is at this point 1 year ahead of our previously announced schedule of 2023 or 2024. And we're continuing to refine this date as we make more progress on the program. So this is something that is really going to provide different payment alternatives to the U.S. citizens as well as businesses in the United States.
Well, that sounds great, and it's coming up soon as well. And you're even able to beat your target date in the midst of the pandemic. So congratulations on that. How was that possible?
You know, we have a lot of very energetic, innovative people working on this initiative. And right now we have over 200 people across the United States representing people from all reserve banks working on this particular initiative. And as you point out, all during the pandemic. So we're effectively collaborating, meeting remotely, and all driven towards the mission of providing this really important payment service to the citizens of the United States.
All right. Well, how has the financial services industry responded to the creation of the FedNow service?
So I'd say that the financial services industry has been very supportive of this movement to faster payments. You know, there's a long history here where over the last 5 or so years, the Fed has been convening members of the financial services industry to talk about how do we evolve the payment system from a speed and security and access perspective. And so in this regard, they were very encouraging through a process that we went through to solicit input and comment from the industry on the Fed's participation in faster payments. And a work group of private sector financial services firms and others recommended that the Fed participate in the faster service business. And so they have been very supportive. I will say that it's a lot to undertake for the Fed as well as a financial institution to make the necessary updates and investments to support faster payments. But I would say everybody involved in this is optimistic about the benefits that we're going to see in terms of faster payments. I may have mentioned this earlier. As we look around the world, the United States is lagging other countries in its use of instant payments. So this is something that we want to make sure that we get in, we get right, and that we're very effective in our usage of this structure.
You staying ahead of the trends. FinTech innovation is happening so rapidly and happening around the world. And as you say, the U.S. is lagging. How do you stay ahead of the trends? Do you come out to Silicon Valley and talk to the tech titans out here in Silicon Valley to get ideas? Or how do you interact with startups and entrepreneurs, particularly as regards innovation?
So we're talking to all participants with what we're describing as this ecosystem. And that I personally have met with a number of payment providers, fintechs, merchants, and others that have interest in services as well as ideas regarding the payments mechanism. So there is a lot of innovation out there. And as we're building the FedNow service, one of the things we're saying is we want to build the platform of the future. So getting that involvement of all participants, including fintechs, in terms of what are the capabilities, what are the things that we should include in this, has been very important for us as we're looking at this forward. And then we're certainly looking at what's going on around the world. And so there's lots of innovation in other countries. So we're trying to understand what is it that they're doing and how does that apply to some of the things we may be thinking as we're looking at advances in the FedNow service.
All right. Well, a couple of questions came in as we're talking, and I'm just going to pick them up now because one of them relates to FedNow and how it's comparable to SWIFT.
So SWIFT is an international messaging system. And so SWIFT is providing message directions at a network level to basically inter-exchange payments activities. A core difference is the fact that in the FedNow service, it's a real-time gross settlement system, which means that as transactions are coming in, they're being settled with finality in real time. And so as I mentioned earlier, these payments are irrevocable and final. If you compare it to something like SWIFT, there's a process that occurs at the end of the day or different times in the day where that settlement is basically occurring. So I'd say a bit of a different focus, with SWIFT being more focused on the networking activity, with us focused more on the settlement components of this.
I see. Now, how do you keep a spirit of innovation? You're in an innovation job. How do you keep a spirit of innovation amongst your team in this huge institution? How many people do you have reporting to you? You must have a huge team. And how do you keep the innovative spirit alive?
Well, you know, one of the things is how exciting is it to build a new payment system for the United States of America? So we're really drawing people that are driven by the mission and just excited about the opportunity to do this. We're also building this platform using cutting-edge technology. So that in itself is a draw of how we're trying to do this. And truly, FedNow is the highest priority program initiative in the Federal Reserve System. So it's got a lot of attention, it's got a lot of excitement and momentum underneath it as we're moving forward with it. And so we certainly, as I mentioned earlier, have included a number of people from the Federal Reserve System, but we're also hiring a number of resources from the private sector. And so, as I mentioned, there's over 200 people working on the initiative, and as we start going through different phases, we'll draw in more as we have. So as we're working on this, we're trying to act as a startup within a 100-plus-year-old company. And so we're really trying to have that focus on innovation, fast decision-making, and to the extent that we can, take risks as we're moving forward with this initiative. So we have this exciting vibe going around just the commitment to build this important service.
Right. Well, what are some of the cyber risks that are associated with this program?
So a robust security framework has always been part of the FedNow design, particularly the fact that, as I've mentioned several times, the instant and final nature of payments, this is certainly that would be attractive to bad actors. So as we're designing the system, we're certainly very focused on service resiliency. As I've mentioned, this is a system that's open and constantly on. So that 7/24/365 is something we're very focused on. And so there, as we're looking at our architectures, we want to make sure we have redundancy and resiliency. In fact, we're doing a lot of tabletopping and resiliency exercises to make sure that we're thinking all of this through. And then certainly integrity, data integrity, message integrity, and the confidentiality of our data is very important. So as you would imagine, we're very focused on things like tokenization and layered encryption and message signing so that we're validating messages have not been tampered with along the processing cycle. And then fraud is something that we're really focused on making sure we understand this. And so while financial institutions very much have their own fraud processes in place, we're in FedNow likewise going to be adding service to complement financial institutions' in-house capabilities. And so as we talk to the industry, back to your earlier question, they have really told us the importance of tools to combat fraud. And so as part of our initial launch of the FedNow service, we'll provide some inbuilt features for fraud management. One is setting a transaction value limit for all FedNow transactions. And financial institutions will have the ability to set or raise those particular limits. Likewise, institutions will be able to specify certain conditions under which transactions would be rejected, say, for example, by an account number. And then we'll provide a number of reporting features and functionality that will basically let institutions look at how many payments are being rejected or messages are being rejected, so they can determine, do they have the right focus on the number of fraud transactions going through. I should point out, even though I've talked about fraud, overall in the payment system, certainly there is an amount of fraud, but it's small in terms of the overall volume of money going through the systems. And certainly as we develop FedNow, we're looking to minimize, and to the extent we can, eliminate any potential for fraud.
Right, sounds good. Now, how are you educating consumers about this new technology and the risk associated with it?
I think that's an important point and question. And so as we're right now working with the service, we're very involved with financial institutions. They're our customers, they and their service providers. So we're working with them in terms of what are the processes they will need to get in place to not only operate and support the service, but also support their customers. Some of the things that we'll be working with financial institutions and their customers on is just understanding what the overall service looks like. And because the fact payments are final once made, consumers have to understand the implications of that. And then there's just a lot of things that I think consumers are starting to see today and are aware of in terms of other payment mechanisms that you're using with their mobile devices and others. So there's a lot of education that we're going to have to do from now to when we launch the service and beyond to make sure consumers understand not only what is it that they need to do to keep themselves and their transactions safe, but also what are the liabilities and protections that they would have. And so that's one of the nice things about these services through the banking system is there are some policies and protections that basically they will have as part of that as a consumer.
Is there going to be a large advertising promotion push around the launch of this FedNow service?
So, that's some of the things we're working on as we talk about launching a new business, and the first one in 40 years is how do we get the word out? How do we get the word out not only to financial institutions, but their customers as well about this new service, its capabilities, and what it means to them. So we're starting those conversations, starting to see just when would be the right time to start launching and talking about some of those activities. So stay tuned. We'll be hearing more about this.
I think a lot of consumers will want to know what impact FedNow will have on Zelle and Venmo and PayPal. That's actually a question from one of our audience members.
So, I think what it's going to do is provide choice in terms of what is the particular payment, what is it that their bank or financial institutions offering them, and what are the benefits they're going to get from any of those payment mechanisms. So certainly speed, access, and cost are things that apply to any choice when you come to payments, and they're the sorts of things that we'll be working with financial institutions and consumers to understand.
Okay. Now, another topic for our conversation is on the central banking, the digital currency system, blockchain. And certainly blockchain has become a mainstream word. I think maybe 10 years ago, did we have the word blockchain? I think maybe we didn't. But today we're hearing about it a lot. And so how is the Federal Reserve dealing with this advent of blockchain technology?
So something that's getting a lot of attention is something referred to as central bank digital currencies. And what a central bank digital currency, or CBDC, is basically a representation of the US dollar. And so there's a lot of different countries around the world that are looking at exploration of central bank digital currencies. And so here in the US, we are building a prototype CBDC in partnership with MIT's Digital Currency Initiative. And so this is a technical research to investigate how to build a CBDC with the speed, security, privacy, and resiliency required to basically be digital money for the world's largest economy. And so we're working with MIT now, and we'll jointly publish a research paper and create some open source license for the code probably in the third quarter of this year. And so this really represents the first phase of our work, where we're building the core clearing and settlement engine for a CBDC. And I've used the term core clearing and settlement, and in essence what that means is messages are coming in, transactions are coming in, and basically they're being cleared through the financial system and settled between institutions, other parties, and eventually the consumer in this regard. So if you look at a digital transaction, you can think about all the steps we would have to put in place to validate that. And so one of the things we want to make sure is that we can build a platform that would handle the unique needs and volume for the United States. And so after we get through that particular phase, we're going to add more functionality and see if the technology can also look at some of the policy issues, such as the trade-off between privacy as well as the ability to track bad behavior, like anti-money laundering features as we go through with this. And so this is, as I said, a prototype of what we're trying to do. There's no plans for us to go forward beyond that at this point. And so we're really looking at what are the technology capabilities. Some of the things that we're going to do in parallel and are doing in parallel with this, we're also doing a comparative analysis of over 40 different private sector options and open source platforms that claim to be doing some work related to digital transactions here, to see if any of those could potentially meet our longer term needs, and perhaps bring some of these into our labs to do some more R&D. So this too, as you mentioned, Rebecca, is pretty exciting. It's really interesting, I'll say, cutting edge usage of technology and how that would basically be used as part of the overall payment system in the United States.
Okay, well, where does this put us in comparison to other countries then?
So you've probably seen in the press of late, both the U.S. Treasury Secretary Janet Yellen and the chair of the Federal Reserve System, Jay Powell, have noted that this work of CBDC is a high priority. It's certainly getting very serious attention. And as I noted, we're making good progress on this. As we look, other developed nations are likewise looking at this. China, by far, is the furthest along, and they, as you've probably read, are in a production pilot. You know, they started their initiative on this and some active coding reportedly back in 2015. We also know that Sweden has been studying central bank digital currencies for a number of years, given the fact that their paper currency has very little usage. So, you know, our work, we think, is really one of the leading efforts going on in the world today. We know that there's about 40 other central banks around the world that have been doing some research on this. but don't have any specific development or deployment plans at this point. Having said all of that, every central bank, every payments provider at a national level is starting to look at the implications of CBDC, either as in a research or some other efforts. But I want to highlight the technology is just one component of this, and that certainly if we're looking to roll out a CBDC, there's a number of policy and legal issues that would have to be addressed as part of that. But these are the sorts of things a central bank should be doing, and that is understanding the implications of payment structures that improve and support the efficiency and effectiveness of the payment system, as well as the overall U.S. economy.
Right. Well, going back to the FedNow service, there's a question from the audience about how the Fed is helping thousands of U.S. banks prepare for the launch of the FedNow service.
A very good question. So there's over 10,000 financial institutions in the United States, and we're doing a lot of reach out to make sure that they're informed and aware of the services available through the FedNow service. At this point, we have started a pilot program that involves over 125 different financial institutions of all sizes in all geographic areas within the United States. So we can start to understand just what is it that they're going to need to effectively cut into this new FedNow service. We're also working with the processors that support a lot of those smaller financial institutions, that they too can understand what it involves to implement the service, and they can start working with their financial institutions as well. We have a team of people whose job it is to make sure that we're providing the reach out and communication to financial institutions of all sizes across the country so that they see the benefit and they can start planning for the implementation of the FedNow service. As I mentioned earlier, this isn't a quick cutover. It's something that you have to plan for because you're going to be running 7x24, 365. You can imagine there's implications for staffing, for call centers, those types of things. And then there's also a training that would need to go on with this. So there is going to be this extensive outreach that I've mentioned a couple of times to make sure financial institutions are ready for its implementation.
You mentioned partnering with MIT. Is there an opportunity for other technology providers to work with the Fed on a central banking digital currency?
There is. So as I've mentioned, we're on a parallel path looking at this point, over 40 different technology organizations, other providers, about what are their capabilities. And so as we start working through that, that's where we'll start to narrow down what are opportunities to perhaps do some prototyping or other proof of concepts with that. And then I would say the same thing exists for FedNow, in that we are looking at what are different technology providers. We're working with fintechs, as I mentioned, that perhaps can add some value-added services beyond just the core message transactions and other related settlement activities. So this is an ecosystem, as I said earlier. So beyond just financial institutions, we want to work with merchants. We want to work with tech firms to see what are other things that we can add to the service that will provide value.
Well, good. Now, you have a competitor out there, a clearinghouse in the private sector. And is it better to have competition in this kind of field?
So I mentioned earlier the fact that, it was the industry that made this recommendation for the Fed to become an operator of this instant payment service. There is a private sector, as Rebecca points out, a private sector participant already in the marketplace, the clearinghouse with a product called RTP. And so we think having two providers is beneficial to the United States. And the reason for that is several-fold. One is it provides a level of resiliency, so the systems can back one another up if there's operational outages in either of the systems. Two, over the years, we've proven that we can cooperate and compete. So the clearinghouse runs an ACH system, as does the Federal Reserve. And so over the years, we've had opportunities to interoperate and compete on those levels. And my expectation is with FedNow, we're certainly going to compete for features, function, cost as we're moving that forward. I will say on the other side of this is that we are in conversations with the clearinghouse about how we can work together for interoperability so that our systems can talk to one another so that a payment made on one system has connectivity to a participant who's on both of these systems as well. So we think it's a positive to have two players in here for the reasons I mentioned. And over time, we'll see what does this do in terms of evolving both of the services.
You mentioned that the U.S. is lagging other countries in development of fintech innovation. Why do you think that is? And should the U.S. try to catch up, or should the U.S. maintain things at its own pace?
So I don't think it was lagging in terms of fintech innovation. It was lagging to have an instant payment system. And that was more because, we've got existing systems that are meeting their needs, but we need to continue to evolve these systems. I think in terms of the fintech space for payments, the U.S. is doing a great job, and there's lots of really interesting payment activities out there. And, you've mentioned some of them before in terms of the Venmos, the PayPals, et cetera. However, as we compare ourselves to some of the things going on in payments with China, with WeChat Pay, Alipay, those types of things, I think we can see there's some opportunity there in terms of what they've done. And so I think that's strictly from a technology perspective, as you look at some of the end-to-end of what's it mean in terms of the tech firms providing those services, to what's it mean for financial institutions, some of the other safety that comes with that. That's where we have some differences. But I think the innovation going on in our fintech space, particularly around payments, is very exciting and certainly world-class.
Right. What do you think about the use of QR codes? I know that's pervasive in China. Is it going to become that way in the U.S.?
I think QR codes are gaining a foothold in the U.S. A couple of points I'll make is I talk to merchants. They're certainly looking at the implications of QR codes and what that means to them in terms of instant payments, the number of transactions they can support, and other routing opportunities that may provide. A nonprofit group called the U.S. Faster Payments Council, which is a consortium of financial institutions, tech firms, as well as merchants, has an actual work group looking at the implications of QR codes as it relates specifically to instant payments. So as use cases are developed there, I've really seen that gaining traction. At this point, all of us who have eaten in a restaurant during a pandemic are used to using a QR code now. So the U.S. consumer is getting used to using them. And as we can tie that to other use cases and then into the instant payment approach, we think there's going to be some real opportunity there.
Well, that sounds great. Now, on the FedNow service, is that going to be available to non-U.S. users? It's a question from the audience.
At this point, it's a domestic service. On our roadmap is cross-border payments, where you would get that exchange internationally. The issue with cross-border payments is less about implementation of the technology. It's more about the policy and legal structure underneath all of that. But it is a very frequent request that we're getting, which is, can this be extended for cross-border payments? And as I noted, it is something on our roadmap, and we'll figure out what is the right time to address that from both a technology and a policy perspective.
I see. Well, another question from the audience, could a central banking digital currency originating in Europe or Asia become an alternative standard?
So some would argue that is some of the things as China is looking at their rollout of a digital currency. Is it something that could basically replace the US dollar as the default trading currency? And so that is something that as central banks are looking at these activities. There's lots of other reasons to use a central bank digital currency in support of trade. Cross-border is something we were talking to them about. But there are certainly some of the things that have come up as people are looking at those particular issues.
Well, looking at innovation as a whole, tech innovation as a whole, how would you gauge the innovation level in FinTech, in the FinTech field, in comparison to, say, transportation or health, or just what do you think?
I think there's a lot of innovation going on in FinTech, in health, in transportation, as you point out. But I'd have to say, and maybe it's because my lens is predominantly FinTech, I really think it's really leading edge and outpaces some of the activities we see in other areas. As you start to looking at FinTech across other different uses of it in terms of even distribution, how it ties into online ordering, there's lots of innovative ideas going on there. And again, I've mentioned this a couple of times in our discussion today. I really think as we're looking at payments, there's an opportunity for FinTechs to start to look at what are some of the value-added services beyond just the transfer of funds and other things related to safety, security, other innovation, and lower costs.
I see. So this could unleash a whole series of innovations then.
That would be my hope, is as we start working with other members of the ecosystem, we're seeing other use cases. We're seeing other gaps that would need to be filled, which is why we're trying to be very inclusive and that we're talking to all segments related to this ecosystem that are both users, practitioners, and customers of the payment system.
Very good. What other technologies do you think will be important for finance in the coming decade?
So, as we talk about things like fraud, certainly AI is something that we would see as very important. We didn't touch on it today, but some of the other work that the Boston Fed is looking at is how can we use artificial intelligence in some fraud detection and modeling going forward. Certainly, lots of people are talking about data and analytics and what are those sorts of things that basically can help us make decisions faster and easier based on the large amounts of data that we're all consuming and storing at these points.
Right. So you as the leader of this innovation that's happening with FedNow, how are you staying on top of the trends? I mean, do you get up in the morning and immediately go to, your email inbox or social media, or what are your tools that you use to keep ahead of the trends?
So, I tell people I have one of the coolest jobs in the Federal Reserve System because I get to get involved in a lot of these innovative ideas. So as you point out, I'm doing lots of reading constantly. I'm also meeting with people, and even during the pandemic, we're having lots of virtual meetings with suppliers, entrepreneurs, FinTech firms. And then, as you point out, there's lots going on around the world. So the trade press, emails, websites are just a great source of information. And so they're the things that we're using to get ideas, and we're really encouraging people involved in these efforts to do the same thing. So it's a lot of fun, and we're all learning something at the same time.
Very good. An audience member wants to know if you could give us some guidance on the timeline for the central banking digital currency trial in the U.S.?
So as I noted, we're going to publish a white paper in the third quarter of the year, just to show what we've learned, what we've accomplished in this period of time. And then we'll look at what are some of the next steps associated with that. I'd say at this point, we're taking the CBDC effort as a technology research process. I will point out to you that there recently has been a really good paper published by staff at the Board of Governors of the Federal Reserve in Washington that outlines all the different issues related to what would need to be addressed for implementation of a digital currency. So I would encourage you to go out if you have the time and read that particular paper, because it'll show that it's just not a technology initiative. It entails evaluation of a lot of the other things I was talking about. So it's one, after we complete this work, then we'll look at what are the next steps. We'll be very transparent about the activities we have underway with this.
So there'll be a whole series of proof of the technology. Does it really work?
Exactly. And, how to get that to work, how to get it to scale, and how to make sure it's secure, certainly, are fundamental things we need to get right.
Right. Well, this must be an exciting time for you. Or maybe it's a time where you're like, you wake up in the middle of the night. Oh, no, I got to get ready for this next chapter. Tell us.
So it's certainly been very interesting. So FedNow is an incredibly large program, and everybody knows how difficult it is to run a program, integrate a lot of technology, bring product to market, while at the same time doing all the things around building a new business. And so there's times that it is the chaotic, as you say, gee, what's going on, and others of, hey, this is really cool, how do we move this forward? So as I mentioned earlier, the Boston Fed were really trying to have this spirit of innovation to get people to think about how can we move initiatives forward, and that too is very exciting.
Exactly. Well, Ken, thank you so much for your time and your insights. I really enjoyed speaking with you, and I think the audience members definitely benefited from hearing what's going on, all the progress that's being made. So I think this week the FinTech Talks are here, FinTech Sandbox, a whole series of exciting discussions about how FinTech can play a part in our lives, business, and personal. And I believe the registration is free, so March 16th through the 19th. And the website is FinTech Sandbox. So thank you, everyone, for listening. We're grateful for your time and your patience, and we'll see you next time.
Thank you.